Time now for our Wall Street Week Daily segment. The host of Wall Street Week, David Westin, joining us as he does every day at this time. And David, as we close out the first half of this year, I think one of the more surprising elements in the market has been the housing market itself.
Yeah, we thought we were in, some people call it a recession actually in housing, and now the last couple of months they bounced back. And I'm not sure that's good news or bad news in terms of the economy, but we know somebody who does know the answer to that question. She is Nancy Vanden Houten, Oxford Economics Lead US Economist. So Nancy, thank you so much for joining us. First of all, were you as surprised as some others were in the real bounce back the last couple of months in the housing numbers?
Well, first, thank you for having me. I think over the last several months, particularly in the wake of a sharp rise of mortgage rates, there have been some things about housing that have been surprising, other things that have been less so. I think one of the surprises to us has been the resilience in the market for new home sales. Maybe taking a step back, we should be less surprised because the new home market is benefiting from a very severe shortage of existing homes for sale. And also, home builders have been fairly aggressive in offering incentives to clear their inventory, including price reductions and in some cases helping buyers with their mortgage rates. So again, taking a step back, perhaps we should not be so surprised about the strength there.
Nancy, from your understanding of this market, are we seeing a real turnaround? We've had a couple of months now, strong numbers. Do you expect that to continue through the end of the year, or could we have a turnaround yet again back down?
Well, our forecast at Oxford is for these recent strong numbers not to be sustained. We think that a shortage of existing homes will continue to support the new home market, but there are some headwinds. First, we expect the economy to enter a mild recession at the end of the year, and that will feature some job losses, which will weigh on demand for housing. Also, the impact of tighter lending standards has yet to be fully felt in the housing market.
Nancy, I am curious, anytime we talk about the health of the housing market, we focus on the actual people who live there, meaning, the buyers themselves here. But we know there's also been a big investment component to our housing market, depending on the region. How much of that factors into your outlook?
Are you talking about investment from outside of individuals?
Yes. Yes.
Yeah, well, I think that's been a key factor in the housing market over the last several years, and in some ways has contributed to the shortage of homes for sale in the existing market, with investors purchasing homes and then converting them into rental properties. I think that there is some evidence, though, that that trend has taken a little bit of a step back in recent months.
What do you think could actually maybe provide a little bit more of a tailwind for the housing market? Is it rates coming down, mortgage rates coming down? Is it just economic stability? What do you look at?
Well, I think that a decline in mortgage rates would give the housing market a huge boost. Unfortunately, our forecast is for rates not to come down too much until next year. The rise in rates has really frozen up the existing home market. That market has been plagued by a shortage of inventory for several years, coming out of the global financial crisis. And then the shortage has been exacerbated following the sharp run-up in rates over the last year. Many would-be sellers have retreated to the sidelines. Many homeowners have mortgage rates at 3%, in some cases lower, and it just doesn't make sense unless you really are in a position where you have to sell your home to do so right now. If you're a buyer who relies on a mortgage, there's not much motivation to give up your 3% mortgage for one that's somewhere between 6 and 7%. Okay, I'm sorry, go ahead.
No, I was just saying to that very point, Nancy, what does it say about new home construction as opposed to existing homes? You say, if I have a 3% mortgage and I want to trade it in for a 6.5% mortgage, that means, do I want a new home, and does that really mean that industry will be on the upswing?
We do see there's a number of things supporting new home construction. Again, this chronic shortage of homes that's up over several years. There's still a lot of pent-up demand. Some of that has been released over the last couple of years, but there continues to be a lot of demand. Builders, again, to get back to lending standards, builders are seeing some, tightening of lending standards. But I think that the multifamily sector will be impacted more than the single family sector. And even in the face of more restrictive lending, home builder sentiment has improved quite a bit over the last couple of months. I think one reason is that some of the supply chain difficulties that had been plaguing them for a while are starting to resolve. So I do think that there are things supporting home construction going forward, particularly in the multifamily sector. But we're not forecasting a repeat of what we the May housing starts number, which was above 1.6 million.